Happy Tuesday, Maverick traders. This is Rob Reinhold. This is the Market Roundup. Let's get into it. In this session, we're going to be going through the news of the day. There wasn't a whole lot. We're going to take a look at what happened. We have a couple sectors really acting nicely here, but for the most part, there's really one story to this market.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Let's first talk about the news of the day. Last night we had CoreWeave. Now, for those of you that don't know who CoreWeave is, they're a big technology company that does a lot with AI and a lot with data centers. Their earnings disappointed. Now, they disappointed because they could not meet the demand of AI. Just think about that. They blew it. So this was definitely not a system-wide problem that, hey, you know what, there's a problem in the whole AI sector. It's really this company. That being said, we did see some weakness in the other semiconductors. But outside of that, the stock market actually looked pretty decent today, and we got a huge breakout from the healthcare sector. And you can see the Dow, very narrow index, up 1%. The S&P up 0.2%. Remember that S&P 40% is made up of 11 stocks. And so if a whole bunch were down, the rest of the market was up. The Q's down, the Russell basically flat. And I really want to focus here on these internals. We have 56% of all stocks went up today. So it was an up day, even though the market was pretty much flat when you take a look at the headline numbers. The market was up. We're going to take a look first at the S&P. And this is something I've been doing a lot since the summer, as these large cap mega tech stocks have just gotten so big with the SPX. You can see that the SPX was in a pullback. Nice pullback. We pull back down to the 20-day moving average. I talked about this on the trading room. I said that's a great hammer candle. All we need is a Monday confirmation, which we got. This is a bull pullback. And when markets are in uptrends, you buy bull pullbacks. Yes, every now and then it doesn't work. But guess what? Most of the time it does. And you can see today's candle was a great candle. We gapped down. So we had some bad news overnight. We gapped down. The buyers are still there, and we close up close to the high. Now, this is the SPX. I want to take a look here at the RSP. This is the equally weighted S&P 500. So basically, that all of the stocks in the S&P 500 have the same weighting. You can see it's been pretty much sideways. When we got down to the bottom of this range, we hit that support, and you can see that these last 2 days have been very good. And when you take a look at it compared to the S&P, it actually looks even better. I don't see any reason why we don't keep going up to go retest some of these highs. I don't know if we'll break out or not, but you can see that everything, the SPX, the RSP, everything is saying that that was a bull pullback and we're likely to go higher. Take a look at this heat map. Just kind of blur your eyes and take a look at all the red, kind of discard it. Take a look at all the green out here, very heavy green. In healthcare. The healthcare sector had a great breakout today. Again, we've loved the healthcare sector for a long time. It was our favorite sector at the end of last week. It was one of our favorite sectors 2 to 3 weeks before that. It's just been a really nice producer. We are back to a +3 market. We are above moving averages. Moving averages are sloping higher. This is a bullish market, so we want to be leaning towards the bull side. That being said, I've got one bull trade for you, one sideways and one bear. So let's go through those setups now. This is in that healthcare sector. This is Edwards Life Sciences. This stock was really a bad performer over the last year or two, and it's got a little bit of a bid here. Just a beautiful high base. So we came up here, had this nice breakout, had an earnings report here, and you can see we've just based. It's moving higher. I do think this thing's going to 90. I think you're going to need some time. I mean, take a look. How long did it take to move up from 75 to 80? Well, we got some news there. This thing's not a fast mover. The 87.50, if it's there, if it's dollar strikes, the 88, I think you want to be somewhere like an 85, 88. If you can't do that, then maybe an 85, 90 is where you want to be. We are only a week and a half out from November expiration, so I think you're going to have to go till December because this one only has monthly options expirations on it. If you don't like this one, there's tons of great stuff in the healthcare sector. It's our favorite sector at the moment. On the sideways, this is LQK. LQK, and you can see this is exactly what we like to see out of sideways. Range bound, moving averages, flattening out, it hanging around that point. We're going to have to go to the 30 strike. So the 30 strike is where we're going to have to go. But we can actually make a nice trade at 28, 30, 32. That's going to give us a profit window right in here on this butterfly. So this one is slightly bearish, meaning we're looking for this one to come back down into the range. There's lots of good sideways stuff out there at the moment if you take a look for it. And I had a whole list of bearish stocks, but I came back to this one. This is the one I had last week. Last week I said, hey, Circle looks like it's breaking down. This is tied to the cryptocurrency stuff. And you can see it did break down. So I liked it back here at 113, and I like it again down here at 100. This thing looks like it just wants to head lower. Cryptos were weak today, very weak, down about 2 to 3% on the day when the rest of the market was pretty good. I don't see any reason why you can't go to 90 on this one. I like the 90-100 bear put spread. You could be less aggressive than that. Go to the 95. So the 195 bear put spread. I think any of those trades work quite a bit. Let's talk about tomorrow. All right, so we had this fall. We bounced at the 50-day moving average. We got a gap down this morning and it recovered. Again, lower volatility. I think that's where we are. We are in the middle of a bull pullback. We've bounced. We're going to see if we can break through up to new highs. I think that's where we are. How long that takes, I don't know. We could be there in a day. We could be there in 5 days. But the next move looks like it's going to be to approach prior resistance, which was all-time highs, and try to break through it. The general market looks great here. I really like the general market. What I don't like is the AI high beta stocks. I think if that's where you're trying to play, there's some real softness there, and there's some concerns of valuation that are dragging on these things. I just don't think they're in favor at the moment. And these are momentum trades, and you can't be trading them when the momentum is gone. The momentum's not there. Go to the places where there are momentum. We've got lots of momentum in healthcare and industrials, finance. I mean, those look great. So just beware of those high beta AI stocks. Not a lot of earnings on the deck. I don't think we're going to get a very exciting market. I think we're going to be plus or minus 0.5% every day for the rest of the week. So a little bit lower volatility than we've seen lately. That's the Market Roundup. Thanks for joining me. Goodbye, everyone.